Before we dive in, please remember that the information in this video is for educational and entertainment purposes only. I am not a licensed financial advisor or insurance agent, and this presentation does not constitute financial or legal advice. Your own financial situation is unique, and you should always consult with a qualified and licensed professional before making any decisions about your insurance coverage. You know the feeling. It's that slight sense of dread when you see the envelope in the mail, the one with the little clear window. It's your car insurance bill. You take a breath, you tear it open, and your eyes scan for the number. And there it is. It went up. Again. Not by a lot, maybe just $9. Or maybe $20. But it went up. And you have no idea why. You haven't had an accident. You haven't gotten a single ticket. You've been a loyal customer for 5 years, paying on time, every single month. So why are you being punished? You call the 800 number, navigate a maze of automated menus, and finally get a human on the line who gives you a vague, scripted answer about rising costs in your area or new rating factors. You hang up feeling powerless, frustrated, and a little bit cheated. You feel like you're just a number in a giant faceless system designed to slowly squeeze more and more money out of you. If that sounds familiar, you are not alone. And you're in exactly the right place. Because today we are taking the power back. We are going to settle the single biggest debate in American car insurance, the heavyweight championship fight that plays out on your TV screen every single day. Geico versus Progressive. The Gecko versus Flow 15 minutes could save you 15% or more. Versus the company that gives you a name your price tool. They spend a combined $3 billion a year on advertising, all to convince you they are the obvious default choice. But which one is actually better? Which one will give you the best price? And more importantly, which one will actually have your back when you're standing on the side of a highway next to a wrecked car? By the end of this deep dive, you will have the answer. This isn't going to be another vague article that ends with "it depends." I am going to give you the data, the real-world customer stories, and the hard facts you need to make a confident, informed decision. We are going to rip apart their pricing models, expose the hidden discounts most people never claim, and reveal the claims process nightmares they don't want you to hear about. You will learn which company is better for young drivers, which is better for families with a perfect record, and which is surprisingly better if you've had a few bumps in the road. This is the definitive guide you've been searching for, designed to save you hundreds, maybe even thousands of dollars, and protect you from the financial catastrophe of choosing the wrong insurer. The truth is, these two companies are not the same. They look similar on the surface. They both promise low rates and an easy online experience. But underneath the hood, they are built on fundamentally different philosophies. Understanding that difference is the key to unlocking the best possible rate and service for you. Let's start with Geico. Their entire business model, since its inception, has been about one thing: efficiency. The name GEICO actually stands for Government Employees Insurance Company. They started by targeting a very specific low-risk group, federal employees and military officers, and selling directly to them, cutting out the expensive middleman, the insurance agent. That DNA of cutting costs and targeting preferred or low-risk drivers is still at the core of everything they do. They want the driver with a great record, a good credit score, and a stable life. Their goal is to automate everything, make it as simple as possible, and pass those operational savings on to you in the form of lower premiums. They are a lean, mean price-cutting machine. The Gecko is cute, but the business behind it is ruthlessly efficient. Now let's look at Progressive. Their story is almost the opposite. Progressive didn't start by chasing the safest drivers. They built their empire by being smarter than everyone else at ensuring the drivers nobody else wanted. The high-risk drivers. The young drivers, the drivers with tickets and accidents. They became masters of data. While other companies were using blunt instruments to set prices, Progressive was using advanced analytics to slice and dice risk with surgical precision. They were the first major insurer to launch a website, the first to offer price comparisons with their competitors right on their own site, and they pioneered the use of telematics with their Snapshot program. Their philosophy isn't just about being cheap, it's about being the smartest. They believe they can accurately price any risk, and they aren't afraid to take on customers that would make Geico nervous. Flo is friendly and quirky, but the company she represents is a data-driven powerhouse. So you have the efficiency expert versus the data scientist. The company that wants the perfect driver versus the company that believes it can perfectly price any driver. This fundamental difference in their corporate DNA is why one of them is likely a significantly better fit for you than the other. And it's why just getting a single quote from one of them is a massive financial mistake. But before we dive into the head-to-head numbers, we have to destroy the single biggest myth in the insurance industry. It's a lie that costs loyal Americans like you billions of dollars every year. The myth is that loyalty pays. Your bank might give you a better rate for being a longtime customer. Your airline rewards you with status and perks. Your insurance company, they reward you with something called price optimization. It's a sanitized corporate term for a practice that should be illegal. It's the practice of slowly raising your rates over time, not because your risk has changed, but because their data shows you are unlikely to shop around. They are penalizing you for your loyalty. They know you're busy. They know comparing insurance is a hassle. So they bank on you just sighing, shrugging, and paying that extra $10 a month. That $10 becomes $120 a year. Over 5 years, that's $600. For nothing. For being a good customer. That's why we're doing this. Because the only way to beat them at their own game is to be a smarter consumer. It means understanding their strategies and, at least every year, making them fight for your business. It means forcing Geico and Progressive to go head-to-head. So how are we going to do it? We're going to compare them across 5 critical battlegrounds. First, and most importantly for many, is the price. We're not just going to talk in generalities. I've run the numbers for multiple driver profiles across several states. We'll look at a 25-year-old single driver with a clean record. We'll look at a 45-year-old married couple with 2 cars, a house, and a teenage driver. And we'll look at a 60-year-old driver with a recent speeding ticket and a less-than-perfect credit score. The results of who is cheaper for each of these profiles will absolutely surprise you. Second, we'll go beyond the price tag and look at the discounts. Both companies plaster their sites with lists of 24 or more discounts. But which ones are real and which ones are smoke and mirrors? We'll uncover which company offers better and more stackable discounts for things like your profession, your car's safety features, and your payment methods. Third, we'll tackle the moment of truth, the claims process. A cheap policy is worthless if the company fights you tooth and nail when you need to use it. We'll dig into the J.D. Power Claims Satisfaction Studies, analyze customer complaint data from the National Association of Insurance Commissioners, and share real stories of what it's like to file a claim with both Geico and Progressive. Who pays fast and who drags their feet? Fourth, we'll analyze their technology. Both have highly rated mobile apps and telematics programs, Geico's Drive Easy and Progressive's Snapshot, that monitor your driving in exchange for a potential discount. Is this a brilliant way to save money? Or a dystopian privacy invasion that can actually raise your rates? We'll break down the pros and cons. And finally, we'll look at the overall customer experience and coverage options. Who offers better add-ons like rideshare coverage or gap insurance? And whose customer service will actually solve your problem on the first call? This is the ultimate showdown. Forget the commercials. Forget the mascots. It's time for the facts. It's time to find out, once and for all, who truly deserves your hard-earned money. Let's start with the first battleground, the one everyone wants to know about. Who is actually cheaper? Let's pit them head-to-head for our first driver profile. The ideal customer. The 45-year-old with a perfect driving record, good credit, and a desire to bundle their home and auto insurance. The answer is not what you think. We ran the numbers for our 45-year-old driver. Let's call her Sarah. She lives in a mid-sized suburb, drives a 2021 Honda CR-V, has an 800 credit score, and hasn't had a ticket or an accident in over a decade. She owns her home and wants to bundle. She is, by all accounts, the perfect customer that insurance companies dream about. So, who gives her the better deal? We plugged her exact details into both Geico's and Progressive's online quote engines, seeking identical, robust coverage. 100/300/100 liability, with matching comprehensive and collision deductibles. For the auto-only policy, the initial results were shockingly close. Geico came in at an estimated $1,450 for the year. Progressive was just a hair cheaper at $1,420, a $30 difference. At this point, you might just flip a coin, right? But this is where the game truly begins because Sarah wants to bundle. And the bundle changes everything. When we added her 3-bedroom, 2-bath home to the equation, the numbers shifted dramatically. Geico, bundling with one of its insurance partners, offered a combined package for $2,650 a year. That's a significant multi-policy discount. But then we looked at Progressive. They bundled her home and auto for a jaw-dropping $2,400. A full $250 cheaper than Geico. Case closed, right? Progressive is the clear winner for the ideal customer. Not so fast. This is the first major trap that millions of Americans fall into every year. You see, neither Geico nor Progressive are actually insuring Sarah's house. They don't offer homeowners insurance directly. Instead, they act as brokers, partnering with a network of third-party insurance companies. When you get a bundle from them, you're actually buying two separate policies from two different companies, with a discount slapped on top for doing it through one portal. And the quality of that partner company is the single most important and most overlooked factor in this entire decision. Progressive often partners with companies like HomeSite or American Strategic Insurance. Geico has its own network, including names like Liberty Mutual or Travelers. The $250 that Sarah is saving with Progressive might be coming at a hidden cost. For example, the homeowner's policy they quoted her might have a higher hurricane deductible, or it might have a clause for actual cash value on the roof instead of replacement cost. This is a devastating difference. If a hailstorm damages her 10-year-old roof, actual cash value means the insurance company pays for what a 10-year-old roof is worth, leaving Sarah to cover thousands of dollars out of pocket for a new one. The slightly more expensive Geico partner policy, however, might offer full replacement cost, saving her a financial nightmare down the line. The cheaper quote isn't always the better deal. It's often just the one with more corners cut. So for Sarah, the question isn't just who is cheaper. It's who is pairing me with a better homeowner's insurance company. This requires an extra step of research that most people skip. You have to look up reviews for the actual home insurer, not just for Progressive or Geico. But let's assume for a moment that the partner policies are identical in quality. There's still another massive philosophical difference between these two giants that affects our ideal driver, Sarah. Comes down to loyalty. Progressive is obsessed with it. Their entire model is built around getting you in the door and keeping you there with a system of escalating rewards. This starts with their famous snapshot program. If Sarah agrees to let Progressive monitor her driving through their app or a plug-in device, she could earn a significant discount. For a perfect driver like her, this seems like a no-brainer. She avoids hard braking, late-night driving, and excessive speeding. She could easily see her already low premium drop by another 15 or 20%. Furthermore, Progressive has a built-in loyalty program. The longer you stay with them, you unlock perks like small accident forgiveness after a few years, and eventually large accident forgiveness after you've been a customer for 5 years and accident-free for 3. They are actively trying to make it harder for you to leave over time. Geico, on the other hand, takes a much simpler approach. Their pricing is more straightforward. They don't have a comparable loyalty rewards program that dangles future benefits in front of you. Their telematics program, Drive Easy, exists, but it's less central to their marketing. Geico's philosophy is more like, here is our best price. We believe it's low enough that you'll stay. They are banking on the power of their initial quote and their brand reputation, not on a complex system of rewards. For Sarah, this presents a choice. Does she want to play the game with Progressive, using Snapshot and sticking around for 5 years to earn benefits like large accident forgiveness? Or does she prefer Geico's clean, no-strings-attached low price? If she's confident she'll stay with one company for the long haul, Progressive's model might yield greater savings and benefits over a decade. But if she likes to shop around for her insurance every couple of years to ensure she's always getting the best rate, Geico's simplicity is far more appealing. There's no golden handcuff of unvested loyalty perks keeping her there. Finally, we have to talk about the discounts themselves. Both companies shower you with potential discounts, but how they apply them can differ. Geico is famous for its affiliation discounts. Is Sarah a member of an alumni association, a professional organization, or a federal employee? There are hundreds of potential groups that qualify for a Geico discount, and sometimes these aren't automatically applied online. A 5-minute phone call to a Geico agent could uncover a discount that completely erases the price difference with Progressive. Progressive, meanwhile, leans heavily into discounts related to the purchasing process itself. Signing your documents online? That's a discount. Paying your policy in full upfront? That's a huge discount, often one of the biggest you can get. Getting a quote more than a week before your old policy expires? That's the advanced shopper discount. Progressive rewards planners. They build their pricing to favor people who are organized and financially stable enough to pay a large lump sum. So for our ideal driver, Sarah, who is the winner? If we are judging purely on the initial, out-of-the-box online quote for a home and auto bundle, Progressive wins by about 10%. But that is a dangerously incomplete picture. The real answer is, it depends on Sarah's homework. If she investigates the underlying homeowner's policy and finds the Progressive partner offers inferior coverage, then Geico is the hands-down winner, providing better protection for a slightly higher price. If she's willing to use a telematics program like Snapshot and commit to staying with the company for over 5 years, Progressive's long-term loyalty benefits could make them the more valuable choice. But if she's a member of one of Geico's hundreds of partner organizations, a single phone call could flip the script and make Geico the cheapest option outright. The verdict for the perfect customer is murky, and it reveals the core truth of the insurance industry. The headline price is just the beginning of the story. The real value is hidden in the details of the policy, the long-term benefits, and the discounts you have to fight for. But Sarah, with her perfect record and bundled home, represents a best-case scenario. Her business is profitable, and both companies are fighting hard to win it. What happens when we strip all that away? What about the driver that insurance companies see not as a customer, but as a risk? Let's meet our next driver profile. He's 22 years old. He's renting his first apartment, so there's no home to bundle. He's driving a financed 2022 Honda Civic C, a car that screams sports car to an insurance algorithm. And to top it all off, he has one speeding ticket on his record from 6 months ago. He is, in every sense of the word, a high-risk driver. For him, the price difference between Geico and Progressive won't be a mere $30. It will be a chasm. And the company that was cheaper for perfect Sarah might be ruinously expensive for him. Who is willing to give a young driver a second chance, and who sees him as just a liability? The answer will completely change your perception of these two companies. So let's meet our second driver, the one who keeps insurance underwriters up at night. We'll call him Struggling Steve. Steve is 22 years old, a college student working part-time. He drives a 2018 Honda Civic, one of the most common cars on the road. But unlike perfect Sarah, Steve's record isn't perfect. 18 months ago, he got a speeding ticket for going 15 miles per hour over the limit. And just last year, he had a minor at-fault accident, a parking lot fender bender that resulted in a $2,000 claim. He's not a bad kid and he's not a reckless driver, but he's made a couple of mistakes. Mistakes that are now flashing like giant red warning lights on his insurance record. Steve shops for the exact same coverage as Sarah. A standard 100/300/100 liability policy with collision and comprehensive deductibles of $500. He's bracing for a high price. He knows his age and his record are working against him. He goes to Geico's website first. He enters his information meticulously and honestly. The wheel spins for a moment, and the number that comes back is staggering. It's not just high, it's a gut punch. We're talking a premium that's nearly 3 times what perfect Sarah was quoted. For Steve, a student on a tight budget, it's not just expensive, it's practically unaffordable. It's the kind of quote that makes you consider selling your car and buying a bus pass. Why is it so high? Because Geico's algorithm sees a very specific and very dangerous pattern. It sees young male driver, a demographic already considered high risk. It adds a speeding violation, which statistically correlates with a higher likelihood of future accidents. Then it layers on the at-fault accident, the single biggest red flag for an insurer. To Geico's computer, Steve isn't a person who made a couple of mistakes. He's a data profile that screams future claim. The company's business model is built on insuring millions of low-risk drivers like Sarah. They make their money on volume and low claim frequency. A driver like Steve represents a significant financial risk to their carefully balanced risk pool. So they do one of two things: they either decline to offer a policy altogether, or they price the risk so high that it effectively discourages him from becoming a customer. The message is clear. You are not the driver we are looking for. Dejected, Steve moves on to Progressive. He enters the exact same information. He's expecting another astronomical number. The quote comes back. It's still high, there's no escaping that. A 22-year-old with an accident and a ticket is never going to get cheap insurance. But it's not the knockout blow that Geico delivered. It's noticeably, significantly less. Maybe 20 to 25% cheaper. It's still a stretch for his budget, but it's within the realm of possibility. But then he sees something else on the screen. An offer. An invitation. It's for Progressive Snapshot program. This is the fundamental difference. This is where the entire philosophy of the two companies diverges. Geico looked at Steve's past and rendered a verdict. Progressive looks at Steve's past, acknowledges it, but then offers him a path to change his future. Snapshot is a telematics program. You either plug a small device into your car's OBD2 port, or use an app on your phone, and it monitors your actual driving habits. It tracks things like hard braking, rapid acceleration, the time of day you drive, and how many miles you drive. The premise is simple. Your past doesn't have to define you. Show us you're a safe driver now, and we'll reward you with a lower rate. This is a game changer for someone in Steve's position. Geico's high price felt like a punishment he couldn't escape. Progressive's offer feels like a challenge he can win. It gives him a sense of agency, of control over his own insurance costs. Of course, there's a catch. There's always a catch. The big one is privacy. To get this potential discount, Steve has to agree to let Progressive track his every move in the car. They know where he goes when he goes there and how he drives to get there. For many people, that's a hard line they will not cross. It feels like Big Brother riding in the passenger seat. And it's a valid concern. You have to decide if the potential savings are worth that trade-off in personal data. There's another risk too. While Progressive says your rate won't go up in most states based on your snapshot data during the initial monitoring period, driving poorly can certainly eliminate any chance of a discount. And if you consistently drive at high-risk times, like late on a Saturday night, or have a habit of slamming on your brakes, the data could potentially be used to increase your rates at renewal time. You are placing a bet on your own good behavior. But for Steve, the choice is clear. The potential to save hundreds, maybe even over $1,000 a year, is too compelling to ignore. He signs up for Snapshot through the mobile app. And for the next 90 days, his relationship with his car changes. He becomes acutely aware of his driving. He leaves more following distance to avoid hard braking. He accelerates smoothly from stoplights. He takes corners a little slower. He's not just driving to get from point A to point B. He's driving to prove a point. He's driving to show an algorithm that he is not the liability his record suggests. After the initial monitoring period, Progressive analyzes his data. They see a driver who rarely drives between midnight and 4 a.m. They see smooth acceleration and gentle braking. They see a driving style that is cautious and defensive. The data from his present behavior starts to outweigh the mistakes of his past. And his renewal offer comes in with a significant snapshot discount applied. His premium is now dramatically lower than his initial quote, and it's light years away from the crushing number Geico offered. For struggling Steve, Progressive wasn't just cheaper. It was the only viable option. It was the company that gave him a second chance. So what does this tell us? It reveals the core DNA of each company. Geico is a master of mass market efficiency. Their goal is to attract a massive pool of preferred risk drivers and offer them some of the lowest standard rates in the industry. They use a broad, powerful algorithm to filter out risks they don't want. It's a highly effective, but somewhat blunt instrument. If you fit their mold like perfect Sarah, you are rewarded handsomely. If you don't like struggling Steve, you are priced out. Progressive, on the other hand, built its empire on complexity and segmentation. They were pioneers in using data to price risk more granularly. They are more willing to take a chance on a non-standard driver because they believe their data can accurately price the risk involved. Programs like Snapshot are the ultimate expression of this philosophy. Let's move beyond static, historical data and price insurance based on real-time, individual behavior. They are not just insuring your car. They are insuring how you drive your car. This is why you can't just ask, is Geico or Progressive cheaper? The answer is deeply personal. For the driver with a pristine record, a stable life and a standard car, Geico is often the champion of low prices. Their model is built for you. But for the driver in transition, the young driver, the driver with a recent ticket or accident, the driver who feels unfairly judged by their past, Progressive often emerges as the clear winner, not just on price but on principle. They offer a path to redemption. Steve is now happily insured with Progressive, his monthly payment manageable thanks to his careful driving. He proved the algorithm wrong. He feels like he beat the system. But saving money on your premium is only one half of the insurance equation. The entire reason you pay for insurance is for the promise that if something terrible happens, the company will be there to make you whole. What happens when Steve needs to actually use the policy he fought so hard to afford? What happens when he's the victim of a hit and run, and his car is seriously damaged? Suddenly, the friendly app and the promise of discounts fade into the background. Now it's all about the claims process. And in the world of insurance, this is where a company's true character is revealed. Who has the better reputation for paying claims fairly and quickly? Who will fight for you and who will fight with you? The answer to that question is far more important than any discount. Let's start with the moment the glass is swept away and the adrenaline subsides. You're standing on the side of the road, watching your car get hooked up to a tow truck. This is the moment you've been paying for month after month, year after year. This is the test. You pull out your phone to file a claim. And right here, in this first critical interaction, the paths of Geico and Progressive begin to diverge. With Geico, the experience is engineered for digital speed. Their mobile app is consistently ranked as one of the best in the industry. It's clean, intuitive, and designed to get you from, "I've had an accident," to "a claims adjuster has been assigned" in a matter of minutes. You can upload photos, document the scene, and get the ball rolling before the tow truck has even left. For many, this is a godsend. In a moment of high stress, you don't want to navigate a phone tree or wait on hold. You want a button. Geico gives you that button. They've built a well-oiled machine designed for efficiency. The goal is to minimize human friction and maximize speed. Progressive, on the other hand, presents you with a few more options right out of the gate. Their app is also highly functional, but they often put a human touch front and center a little faster. You're more likely to get a call or text from a real person, your dedicated claims representative, very early in the process. They'll walk you through the immediate next steps, ask how you are, and explain what to expect. For those who find comfort in human reassurance, this is a massive advantage. It feels less like you're feeding information into a machine, and more like you're reporting a problem to someone who is there to help solve it. This isn't to say Geico won't have a human contact you, but Progressive's model often feels more immediately personal. Now the claim is filed. The next stage is the appraisal. How much is this going to cost? This is where the money is, and it's where things can get complicated. Both companies have vast networks of approved body shops, and they strongly encourage you to use them. Geico's program is called Auto Repair Express. The pitch is convenience and a lifetime guarantee on the repairs for as long as you own the car. You drop your car off, a Geico adjuster is often on site to work directly with the shop, and they'll even arrange a rental for you right then and there. It's designed to be a one-stop shop that takes the guesswork out of the process. The potential downside? You're in their ecosystem. While the guarantee is great, some critics argue that these direct repair programs can create pressure on the body shop to keep costs down, potentially using aftermarket parts instead of original manufacturer parts to meet the insurer's budget. You always have the right to take your car to your own mechanic, but Geico makes their network so easy to use that most people don't. Progressive has a similar model, but they took it a step further. They have their own network of partner shops, but they also have physical service centers. These are Progressive-branded, concierge-level facilities. The experience is designed to be seamless. You drive your damaged car and a claims rep takes over completely, they write the estimate, and they hand you the keys to a rental car on the spot. They manage the entire repair process with one of their approved shops for you. You don't talk to the body shop, you talk to Progressive. When the work is done, you return the rental and pick up your repaired car, again with the lifetime guarantee. It's the ultimate in hand-holding. The same potential drawback applies. You're ceding a lot of control to the insurance company. But for someone who is busy, stressed, and just wants their car fixed without having to become a part-time project manager, it's an incredibly appealing system. So, both companies have streamlined the logistics. But what about the results? What about the settlement? This is the heart of the matter. Are they paying claims quickly, and more importantly, are they paying them fairly? To answer this, we can't rely on commercials. We have to look at the data. The most respected name in this field is J.D. Power. Every year, they conduct a massive U.S. auto claims satisfaction study, surveying thousands of people who have recently gone through the process. In their 2023 study, the results were incredibly telling. The industry average for overall satisfaction was 873 out of 1,000. Geico scored 871, just slightly below average. Progressive, however, scored 863, a full 10 points below the industry average. Let's break that down because the details matter. The study looks at several key areas. In the first notice of loss, that initial reporting of the claim, Geico was average, while Progressive was below average. In claim servicing, the communication and updates from the adjuster, again, Geico was average, Progressive was below average. In the estimation process, the appraisal of the damage, both were rated below average. And in the most critical category of all, the settlement, the final payout, Geico was rated as average. Progressive was rated below average. This data suggests a pattern. While Progressive may offer a very hands-on concierge-style service, the ultimate financial outcome and overall satisfaction, according to this massive survey, tends to be lower than what customers experience with Geico and many other competitors. Geico, with its efficient tech-first approach, delivers a more consistently average-to-good experience when it comes to the final payout. But that's just one source. Let's look at another crucial metric: the Complaint Index from the National Association of Insurance Commissioners, or the NAIC. This is the official record of consumer complaints lodged against insurance companies with state regulators. The NAIC establishes a national median complaint score of 1.0. A company with a score of 2.0 has twice as many complaints as expected for its size. A score of 0.5 means they have half as many. For private passenger auto insurance, Geico's complaint index is 1.29. That means they receive 29% more complaints than the median insurer of their size. That's not a great number. It points to a significant number of customers who felt so wronged by the process that they took the time to file a formal grievance with the government. Now let's look at Progressive. Their complaint index is 1.63. That's a staggering 63% more complaints than the median. This aligns with the J.D. Power data. It suggests that while their process might look good on paper, a higher percentage of their customers are walking away from a claim feeling like they were treated unfairly. So what does this all mean for you? Paints a complex picture. Geico appears to be a highly efficient, predictable machine. The process is fast, it's tech-forward, and the outcomes are generally right around the industry average. You might not feel a deep personal connection to your claims adjuster, but the system is designed to work, and the data shows it produces a standard, acceptable result most of the time. The slightly elevated complaint index suggests that when things go wrong with the machine, it can be frustrating to get a human to intervene effectively. Progressive, on the other hand, seems to offer a higher touch, more service-oriented experience on the front end, particularly with their service centers. They want you to feel taken care of. However, the data from both J.D. Power and the NAIC suggests a higher risk of dissatisfaction with the actual financial settlement at the end of the day. The significantly higher complaint ratio is a major red flag, indicating that a larger portion of their customers end up unhappy with the final result. Choosing between them on claims is a choice between two different philosophies. Do you prefer the hyper-efficient, digital-first system of Geico, which delivers average results with predictable consistency? Or do you prefer the high-touch, concierge-style option from Progressive, which offers more hand-holding but carries a statistically higher risk of a disappointing financial outcome? The truth is, a smooth claim is a smooth claim, no matter the company. But when there are disagreements about the value of your car, the cost of repairs, or who was at fault, the company's internal culture is put to the test. And the data suggests that in those tough situations, you might face a rockier road with Progressive. This is the most important service you buy from an insurer. But for most drivers, thankfully, a major claim is a rare event. What isn't rare is that monthly bill. The constant, relentless drain on your bank account. And the battle for your business isn't just one in the body shop. It's one discount at a time. Both Geico and Progressive have built their empires on the promise of saving you money. But their approaches to discounts, bundling, and loyalty are fundamentally different. One is a master of the simple upfront price cut. The other is the king of complex, personalized savings that watch your every move. Coming up, we're diving deep into the labyrinth of discounts to see who can actually save you more money. Let's get one thing straight. The price you're quoted is not the price you have to pay. It's the starting point in a negotiation you didn't even know you were having. The real battle for your wallet is fought in the dense, confusing jungle of discounts. And in this jungle, Geico and Progressive are two entirely different predators. Geico's strategy is built on simplicity and identity. Think of their discounts like a checklist. Are you a member of a certain group? Check. Does your car have a certain feature? Check. It's a straightforward system that rewards you for who you are on paper. Progressive, on the other hand, is playing a different game. Their approach is dynamic, behavioral, and deeply personal. They don't just care about who you are. They care about what you do. So let's start with the basics, the low-hanging fruit that both companies offer. This is the common ground. We're talking about the multi-policy discount, often called bundling. It's the oldest trick in the book. Insure your car and your home, or your car and your motorcycle, with the same company and they'll knock a percentage off both. Both Geico and Progressive push this hard, and for good reason. For them, it makes you a stickier customer, less likely to leave. For you, it's often the single biggest discount you can get, sometimes slicing off up to 25%. Similarly, the multi-car discount is a no-brainer. Got more than one vehicle at the same address? You're getting a discount. No contest there. They also both reward the classic signs of a responsible driver. Good student discount? If you or a young driver on your policy are in school and pulling good grades, typically a B average or better, both will give you a break. The logic is simple. Responsible students are often responsible drivers. Completed a defensive driving course? Send them the certificate. It's proof that you're actively trying to be a safer driver, and they'll reward you for it. But this is where the paths begin to diverge. This is where the philosophies clash. Let's talk about loyalty. How do these giants reward you for sticking around? This is a key battleground, and it's where we see Progressive's tiered, game-like system come into play. Progressive has a built-in loyalty rewards program. The moment you sign up, you're in. After a few years, you start unlocking perks. A big one is their small accident forgiveness. With this, if you have a minor claim, say under $500, they won't raise your rates. Stay with them longer, and you can unlock large accident forgiveness. This is the holy grail. It means you could have a major at-fault accident, your first one after several years of being a customer, and Progressive will give you a one-time pass. Your rates won't go up. It's a powerful incentive to stay put, a safety net earned through loyalty. Geico's approach to accident forgiveness is a bit more transactional. It's often not a built-in reward for loyalty, but rather an optional feature you have to pay for. You can add it to your policy from day one, essentially buying an insurance policy for your insurance policy. They do sometimes offer it as an earned reward, but the threshold is often very high. You might need to be accident-free for 5 years or more just to qualify. So with Progressive, loyalty earns you forgiveness. With Geico, you often have to buy it up front or wait a very, very long time. It's a fundamental difference. One feels like a reward, the other feels like an add-on. Now let's move on to the discounts based on your identity and your equipment. This is where Geico has traditionally flexed its muscles. For decades, their core business was built on insuring government and military employees. The name Geico, after all, stands for Government Employees Insurance Company. They have deep roots here, and their discounts for federal employees and service members are often some of the best in the business. They also have a massive list of affiliate groups, over 800 of them. Are you a member of an alumni association, a fraternity, a professional organization, or even a certain credit union? There's a good chance Geico has a deal with them, unlocking a special discount that Progressive might not offer. It pays to check their list. You could be leaving money on the table simply because you didn't know your college degree came with a car insurance perk. Progressive has affiliations too, but their network isn't as historically vast or as central to their brand identity. Instead, they put more emphasis on other factors. Both companies will, of course, give you discounts for having safety features in your car: airbags, anti-lock brakes, anti-theft systems, daytime running lights. The more your car is designed to avoid a crash or protect you in one, the less risk you represent. But this brings us to the main event, the single biggest, most controversial, and potentially most rewarding area of discounts in modern insurance: telematics. This is the technology that watches you drive. Progressive was the pioneer here with Snapshot. Geico followed with its own version, Drive Easy. The premise is the same. You either plug a small device into your car's diagnostic port or, more commonly now, you download an app on your phone. This app then uses your phone's sensors to monitor your driving habits in real time. It's tracking your hard braking, your rapid accelerations, your total mileage, and crucially, the time of day you drive. Are you a smooth, cautious driver who stays off the roads late at night? Or are you a leadfoot who works the night shift? The app knows. And this is where Progressive's high-risk, high-reward philosophy comes into full view. With Snapshot, your driving habits can earn you a significant discount, potentially up to 30%. But here's the critical part that many people miss. In most states, Snapshot can also raise your rates. If the app decides you're a high-risk driver based on its data, you could end up paying more than you would have without it. It's a gamble. You're betting that your real-world driving habits are better than what the insurance company's standard algorithms predict. Geico's Drive Easy program is a bit gentler. They make a big point of stating that your driving data will only be used to give you a discount. Your score can't be used to raise your premium. It's a one-way street. Good driving gets rewarded, but bad driving, at least according to the app, won't actively penalize you at renewal time. This makes Geico's program feel much safer for the average driver. There's no risk of a backfire. The potential discount might not be as high as Progressive's absolute top tier, but there's also no downside. So who are these programs really for? If you are an objectively fantastic driver, someone who accelerates like there's a carton of eggs on the dashboard, who brakes well in advance, and who is tucked in bed by 10 p.m., Progressive Snapshot could be a goldmine. You're the exact customer they want to identify and reward. But if you live in a dense city where hard braking is a daily necessity to avoid taxis and pedestrians, or if you're a bartender or an emergency room nurse who regularly drives late at night, Snapshot could be your worst enemy. It could flag your perfectly normal, context-dependent driving as risky and jack up your rates. For those drivers, Geico's risk-free Drive Easy is the far more logical choice. So the labyrinth of discounts boils down to this. Geico offers a clear, predictable path to savings. It's based on stable, verifiable facts about you and your car. Your military service, your good grades, your car's safety features. These things don't change day to day. It's a system built on trust and established categories. Progressive offers a more volatile, but potentially more lucrative path. They're less concerned with your resume and more concerned with your performance. They're willing to make a bigger bet on you, but only if you're willing to prove day in and day out that you're a safe driver under their constant surveillance. One is a checklist. The other is a constant performance review. One rewards who you are. The other rewards how you act. We've dissected their philosophies. We've explored their loyalty programs and picked apart the technology they use to watch you. We know how they calculate their discounts. But that leaves the billion-dollar question unanswered. After all the discounts are applied, after the data is crunched and the algorithms have run their course, who is actually cheaper? To answer that, we have to stop thinking about this as one single race. It's not. It's an entire Olympic Games of insurance, with different events tailored for different drivers. And in this arena, the gold medal for price can change hands depending on who you are, where you live, and the life you lead. So let's break this down. We're going to run a simulation, pitting Geico and Progressive against each other, across 4 of the most common driver profiles in America. For each round, we're comparing identical, robust coverage levels, well above state minimums, to ensure this is a true apples-to-apples fight for your dollar. First up, let's meet the new grad. This is 22-year-old Alex. Alex just landed their first real job, lives in a city apartment, and is buying their first new car, a reliable Toyota Corolla. Alex has a clean driving record, but there's one giant red flag for insurers: age. To an insurance algorithm, being under 25 is like wearing a giant neon sign that flashes risk. They have less experience and statistically they get into more accidents. It's a brutal reality of insurance pricing. So Alex gets quotes from both companies. Geico comes in with a number that makes Alex's eyes water. It's high. It's the kind of price that makes you consider taking the bus for the rest of your life. They offer their standard good student discount, but it barely makes a dent. Geico's pricing model is famously data-driven, and the decades of data say young drivers are expensive. Period. Then Alex gets the quote from Progressive. It's still high, there's no escaping that, but it's noticeably, significantly lower than Geico's. Why? Because Progressive has leaned heavily into a different strategy. They see young, tech-savvy drivers not just as a risk, but as an opportunity. They aggressively push their Snapshot telematics program. They essentially tell Alex, look, we know the statistics say you're a risk, but we're willing to bet on you. Prove us wrong. Let us monitor your driving for a few months. If you're as safe as you say you are, we'll slash that rate. For a young person on a tight budget, this is an irresistible offer. It gives them a sense of control. So, in the battle for the 22-year-old new grad, Progressive almost always takes the gold. They've built their entire modern strategy around capturing this exact demographic. But let's move on to our next event. Meet the suburban family. This is the Millers. Mark and Sarah are in their early 40s. They have a mortgage, 2 kids, and 2 cars. A Honda Odyssey minivan for hauling the family and a Ford F-150 for Mark's weekend projects. They have good credit, and their driving records are mostly clean, except for a minor fender bender Sarah had 2 years ago. They also need to bundle their home insurance. This is Geico's home turf. This is the demographic the Gecko was practically born to serve. When the Millers get their quotes, the tables turn dramatically. Progressive offers them a decent rate. Their bundling discount is okay, and they don't penalize Sarah too harshly for that old fender bender. But then the Geico quote comes in, and it's a knockout. Geico's entire business model is built on scale and rewarding stability. They see the Millers and their algorithm lights up. 2 cars? Multi-car discount. Check. Homeowners. Bundling discount. Check. Good credit? Financial stability discount? Check. Long history of being insured? Loyalty discount? Check. Geico starts stacking discounts like Jenga blocks. They see a low-risk, high-value, long-term customer, and they will fight tooth and nail on price to win them. That minor fender bender barely registers on their long-term risk assessment. For the established American family with multiple policies and a stable life, Geico's pricing structure is incredibly difficult to beat. Round 2 goes to the Geico decisively. Now for our third competitor, the seasoned veteran. This is 65-year-old Carol. She's recently retired, drives her Buick LaCrosse less than 5,000 miles a year, mostly to the grocery store and to visit her grandkids. Her driving record is flawless. Not just clean flawless. We're talking 40+ years without a single at-fault accident or ticket. She owns her home outright and has a perfect credit score. For an insurance company, Carol is the unicorn, the perfect customer. You'd think both companies would be falling over themselves to offer her the lowest price in history. And they are competitive, but one tends to have a consistent edge. Progressive's rates for seniors are good, but their focus is often on capturing drivers earlier in their life cycle. Geico, on the other hand, excels at rewarding long-term proven safety. Their algorithms are finely tuned to identify and reward drivers like Carol. They offer significant discounts for low mileage, for defensive driving courses popular with seniors, and for long-term accident-free periods. Their system sees her not just as a 65-year-old, but as a driver with a 4-decade track record of being a safe bet. They aren't just predicting she'll be safe, they have the data to prove it. In this head-to-head, Geico often pulls ahead, rewarding that lifetime of safe driving with a slightly, but consistently cheaper premium. Round 3 also goes to Geico. But now for our final and perhaps most important showdown. This is for the driver who needs a second chance. Meet the comeback kid. This is 35-year-old Mike. 5 years ago, Mike made a terrible mistake. He got a DUI. He's paid his fines, completed his classes, and hasn't had so much as a parking ticket since. He's rebuilt his life and has a steady job, but that DUI follows him like a shadow, especially when it comes to insurance. A DUI is the single most catastrophic event for your car insurance rates. It can increase your premium by 100%, 200%, or even more. Many preferred insurance companies won't even offer you a policy. This is where the philosophical difference between Geico and Progressive becomes crystal clear. When Mike applies to Geico, he's often met with an astronomical quote or, in some states, an outright denial. Geico's model is built around insuring lower-risk drivers. A major violation like a DUI throws their algorithm into chaos. They see Mike not as a person who made a mistake 5 years ago, but as a data point in the highest possible risk category. The price they offer reflects that. It's often punishingly high, designed to discourage high-risk applicants from signing up. Then Mike applies to Progressive, and the difference is stunning. Don't get me wrong, the price is high. It has to be. But it's often dramatically lower than Geico's. Why? Because Progressive has made a strategic decision to be a leader in the non-standard insurance market. They have sophisticated tools and pricing tiers specifically for high-risk drivers. They understand that people make mistakes and need a path back. They were one of the first major companies to offer State Route 22 filings online, a document required for many drivers after a DUI. While Geico sees Mike as a liability, Progressive sees him as a customer in a lucrative, underserved market. They are willing to take on the risk, price it accordingly but fairly within that risk pool, and give him a policy. For the driver with a major violation in their past, a DUI, or a serious at-fault accident, Progressive isn't just cheaper. Sometimes they're the only viable option between the two giants. This final crucial round goes to Progressive. So after 4 rounds, we have a split decision. Progressive is the clear winner for young drivers and for those with a checkered past. Geico dominates for stable families and seniors with perfect records. The final price tag is a reflection of who these companies are at their core. Progressive is the hungry innovator, willing to use technology and take on risk to capture new markets. Geico is the established titan, built on rewarding stability, loyalty, and proven safety. The numbers tell a compelling story, but price is only half of the equation. A cheap policy is completely worthless if the company vanishes when you need them most. When your car is crumpled on the side of the highway and you're making that dreaded phone call, who actually answers? Who pays the claim quickly and fairly? And who leaves you stranded in a sea of paperwork and automated phone systems? That is where the real battle for better is truly fought. This is the moment of truth. Forget the commercials, forget the discounts, forget everything we've talked about so far. Because when you're standing on the shoulder of a busy highway, heart pounding, glass glittering on the asphalt, none of that matters. The only thing that matters is the voice on the other end of the phone. This is the ultimate test of an insurance company. Not how well they take your money, but how well they give it back when you need it most. The claims process. So let's stage a crash. Not a real one, of course, but a scenario that plays out thousands of times a day across America. A simple, no-fault accident. Someone runs a red light and T-bones you in an intersection. You're okay, thankfully, but your car is a wreck. You pull out your phone. Who do you want to have on your policy? Geico or Progressive? To figure this out, we can't just rely on anecdotes. We need to look at the hard data, the nationwide scorecards kept by the most respected third-party judges in the industry. We're talking about J.D. Power, which conducts massive annual studies on customer satisfaction with the auto claims process. We're also looking at the National Association of Insurance Commissioners, or NAIC, which tracks the number of official complaints filed against an insurer relative to its size. And finally, we'll touch on AM Best, which rates financial strength, basically their ability to actually pay the claims. Let's break this down into 4 critical stages. Stage 1, the first contact. Stage 2, the assessment. Stage 3, the repair. And Stage 4, the payout. Stage 1, the first contact. You've just had the accident. You need to report it. This is your first notice of loss. Speed and ease are everything here. Both Geico and Progressive have invested hundreds of millions of dollars into their mobile apps. And this is where it pays off. Both apps allow you to start a claim, upload photos of the damage, and get the ball rolling in minutes, right from the scene. It's a massive improvement over the old days of waiting on hold. In this initial stage, the two are neck and neck. They are both tech-forward companies that have streamlined this process beautifully. However, J.D. Power's data gives us a slight edge. In their 2023 U.S. Auto Claims Satisfaction Study, they measure this first notice of loss experience. Historically, both companies perform well, but there's a subtle difference. Customers often praise Geico's app for its sheer simplicity and intuitive design. It feels a little less cluttered, a little more focused on just getting the essential information logged. Progressive's app is a powerhouse of features, but for that panicked moment right after a crash, some users find Geico's streamlined approach to be calmer and more reassuring. It's a small victory, but in a moment of high stress, small things matter. Round 1, a narrow win for Geico. But filing the claim is just the beginning. Now we enter Stage 2, the assessment. This is where an adjuster gets involved to determine how bad the damage is and what it will cost to fix. And this is where the two companies' philosophies start to dramatically diverge. Geico has historically relied on a massive network of in-house adjusters and drive-in inspection centers. The traditional process was, you file a claim, they schedule you to bring your car to a Geico facility, and one of their own employees inspects it. The pro of this system is consistency. A Geico adjuster is trained the Geico way. The con can be slow. You have to wait for an appointment, drive to their location, and it adds time to the process. More recently, they've leaned heavily into photo-based estimating through their app, where you send pictures and they write an estimate remotely. This is fast, but it's often just a preliminary estimate, and the real number can change dramatically once a body shop actually takes the car apart. Progressive, on the other hand, was a pioneer of the immediate response model. They put their adjusters in mobile CAT, or catastrophe response vehicles, and aimed to meet you wherever you were, at the scene, at your home, at your work. Their goal was speed. Get an adjuster to the car fast. This approach often leads to a faster initial assessment. Furthermore, Progressive has a more integrated system with its network of preferred repair shops. Often you can just take your car directly to a network shop, and that shop's estimate, handled by an adjuster who works with them constantly, becomes the official estimate. It's a system built for speed and efficiency. When you look at the satisfaction scores for the claim servicing part of the J.D. Power study, which includes the adjuster, Progressive consistently scores very well. Customers feel the process moves faster. They feel like they get answers and a plan of action more quickly. Geico's process, while thorough, can sometimes feel more bureaucratic and siloed. For the speed and directness of their assessment process, Stage 2 goes to Progressive. Now we're tied. Let's move to Stage 3, the repair. Your car is banged up, the estimate is written. Now it needs to be fixed. This is arguably the most important part of the whole experience. Both Geico and Progressive have vast networks of pre-approved, preferred body shops. Geico has its Auto Repair Express program, and Progressive has its network shops. Here's the deal with these programs. If you use one of their shops, the process is incredibly smooth. The shop and the insurance company have a direct line of communication. The shop bills the insurer directly. The insurer typically guarantees the repairs for as long as you own the car. It's designed to be a seamless, hassle-free experience. And for the most part, it is. The conflict arises when you want to use your own body shop, a place you trust that isn't in their network. This is your legal right. But this is where you can feel the pressure. Both companies might warn you that the process will be slower, that they can't guarantee the work, and that you might have to pay out of pocket and wait for reimbursement if there are disagreements over labor rates or parts used. So, who handles this better? This is where we turn to the NAIC Complaint Index. A score of 1.00 is the national average. A score below 1.00 means fewer complaints than average for its size. A score above 1.00 means more. For years, both Geico and Progressive have hovered right around or slightly below the national average, which is good for companies of their massive size. However, digging into the types of complaints, a pattern emerges. A significant portion of complaints against both companies relates to unsatisfactory settlements or delays in the repair process, often stemming from disputes between the insurer and non-network shops. Neither company is perfect here. But anecdotally and through analysis of consumer forums, Progressive's integrated network seems to create a slightly smoother experience if you stay within their system. Their relationship with their network shops is famously deep. Because Progressive was built from the ground up to serve a more diverse risk pool, they had to become masters of efficient, cost-controlled claims. Their network is the key to that. Geico's program is excellent, but Progressive's feels like a core part of its DNA. If you're willing to use their recommended shop, Progressive's repair process is often a well-oiled machine. Stage 3 by a hair goes to Progressive. This brings us to the final, most crucial stage. Stage 4, the payout. This applies if your car is declared a total loss, or for settling medical claims. This is the bottom line. How much do they say your totaled car was worth? How quickly do they cut the check? This is where things get really contentious. An insurance company's goal is to indemnify you, to make you whole, to put you back in the financial position you were in moments before the crash. Your goal is the same. The disagreement is over the definition of whole. Both Geico and Progressive use third-party data services to determine the actual cash value, or ACV, of a totaled vehicle. They look at comparable vehicles for sale in your local market to arrive at a value. And this is where the complaints pile up. Many customers feel the initial offers are low. They feel the comparable vehicles cited are base models, in poor condition, or located hundreds of miles away. The key to winning this stage is not just the initial offer, but the company's willingness to negotiate when you present counter-evidence. If you can find legitimate, comparable vehicles for sale at a higher price, will your adjuster listen? Here, the data is murky, and we have to lean more on consumer sentiment and complaint trends. Historically, Geico has faced criticism for being rigid in its valuations. Their massive, data-driven system can sometimes feel impersonal and inflexible. You're arguing with the algorithm. Progressive, while still a tough negotiator, often receives slightly better marks for the human element in the final settlement phase. Their adjusters are often given a bit more autonomy to resolve a claim and avoid it escalating. In the J.D. Power study, the settlement category is where the biggest gaps in satisfaction appear. And in recent years, Progressive has maintained a competitive edge here. They seem to understand that a few $100 extra to close a claim and keep a customer happy is better than dragging it out and creating a negative review that lasts forever. So, after a brutal 4-stage battle, who comes out on top in the claims process? While Geico provides a solid, reliable experience, especially at the start, Progressive's emphasis on speed, its deeply integrated repair network, and a slightly more flexible settlement process gives it the victory. When the worst happens, the evidence suggests Progressive is slightly better at picking up the pieces and doing it faster. But a car insurance relationship isn't just about that one horrible day. It's also about the 364 other days of the year. It's about paying your bill, changing your coverage, adding a new driver. It's about the technology you interact with every single day. And in the battle for the best app, the best website, and the best user experience, one of these giants has a secret weapon that completely changes the game. That secret weapon isn't a single feature you can point to on a screen. It's a fundamental philosophy. It's the difference between an insurance company that gives you a tool and one that tries to build an entire ecosystem around you, the driver. And Progressive is the one that built the ecosystem. It all starts with Snapshot. Now let's be clear. Geico has its own version called Drive Easy. Both are telematics programs. They use an app on your phone to monitor your driving habits. How hard you brake, how fast you accelerate, what time of day you drive, and whether you're using your phone while behind the wheel. The promise is simple. Drive safely and we'll give you a discount. But the way Progressive has integrated Snapshot into its very DNA is what sets it apart. For Progressive, Snapshot isn't just an optional add-on. It feels like the main event. The moment you open their app, you're not just a customer, you're a participant. You get a driving score. You get trip reports. You get badges and streaks for good behavior. They have turned the act of driving safely into a video game. And the reward is cold, hard cash off your premium. This is a masterclass in behavioral psychology. It makes you want to open the app. It makes you care about your braking score on the way to the grocery store. It creates a constant, active relationship between you and your insurer. You're not just paying a bill every 6 months. You're partners in a shared goal of reducing risk. When you file a claim through the Progressive app, you can upload photos, schedule with a network repair shop, and track the entire process from start to finish. Need roadside assistance? It uses your phone's GPS to pinpoint your location. Need your ID card? It's 2 taps away. But all of this is wrapped in that central gamified experience of Snapshot. The app feels less like a boring administrative tool, and more like a high-tech dashboard for your driving life. It's a coach, constantly giving you feedback, pushing you to be better, and rewarding you for it. Now let's switch gears to Geico. If Progressive's app is a coach, Geico's app is a world-class butler. It's clean, it's unbelievably fast, and it is ruthlessly efficient. Geico's entire brand is built on speed and simplicity. 15 minutes could save you 15% or more, and their digital experience reflects this perfectly. Opening the Geico app doesn't feel like starting a game. It feels like getting things done. Your policy information is front and center. Paying your bill takes seconds. Accessing your ID cards is instantaneous. Filing a claim is a streamlined step-by-step process that removes any confusion. Geico understands that most people don't want a relationship with their insurance company. They want the company to be invisible until the moment they need them, and in that moment, they want the process to be as painless as humanly possible. The Geico app is the digital embodiment of that promise. It is a masterpiece of no-nonsense design. Geico's telematics program Drive Easy is right there in the app, and functionally it does the same thing as Snapshot. It tracks your driving and offers a discount. But it feels different. It feels like a feature within the app, not the central nervous system of the app. There's less emphasis on constant feedback and gamification. It's more of a set-it-and-forget-it system. Turn it on, drive safely, and Geico will adjust your rate. The focus is on the outcome, the discount, not the daily process of getting there. It's a tool, not an experience. This philosophical divide extends to their websites. The Progressive website is an interactive maze of tools and options. You have the famous Name Your Price tool, comparison tools, and endless articles and resources. It invites you to tinker, to explore, to spend time figuring out every possible angle to save money. It's powerful, but for some, it can feel a little overwhelming, a little busy. The Geico website, like its app, is a monument to speed. It's designed with one primary goal: get you from point A to point B as quickly as possible, whether that's getting a quote or managing your policy. The layout is cleaner, the language is simpler, and there are fewer distractions. It's built for the person who has a task to complete and wants to complete it right now without any fuss. So, who wins the technology battle? This is where it gets interesting, because there is no single right answer. It comes down to what kind of person you are. If you are a data-driven, hands-on person who loves feedback, optimization, and feeling in control, Progressive's digital ecosystem is built for you. You'll love the gamified nature of Snapshot, the detailed trip reports, and the feeling that you are an active participant in determining your own insurance rate. You want a co-pilot who's with you for the whole ride, and Progressive's technology delivers that. However, if you are a set-it-and-forget-it person who values speed, simplicity, and efficiency above all else, Geico's digital tools are undeniably superior. You see insurance as a utility, a safety net you hope to never use. You don't want a coach. You want a silent guardian. You want an app that opens instantly, does its job flawlessly, and then gets out of your way. For you, Geico's technology is the clear winner. One company wants to be your partner. The other wants to be your provider. One built an experience, the other perfected a tool. But here's the billion-dollar question. What happens when the smooth, slick digital interface is no longer enough? What happens when you're not just trying to get a discount or pay a bill, but you're standing on the side of a highway, looking at the twisted metal that used to be your car? All the apps, all the telematics, all the user-friendly websites in the world become meaningless in that one terrifying moment. In that moment, you don't care about your driving score. You care about one thing and one thing only. Will my insurance company have my back? The true test of an insurer isn't how they take your money. It's how they behave when they have to give some of it back. We're talking about the claims process. The adjusters, the repair shops, the rental cars, the settlement checks. This is the moment of truth. And the experiences of real customers, from 5-star reviews to 1-star nightmares, reveal the single most important difference between Geico and Progressive. It's what happens after the crash. Let's break down that moment. The adrenaline is still pumping. You're standing on the side of the road, the air thick with the smell of burnt rubber and deployed airbags. Your meticulously researched, perfectly priced insurance policy is no longer a theoretical concept on a screen. It's a promise. And you're about to find out if that promise will be kept. This is where the cute gecko and the bubbly cashier disappear. This is the claims process. It is the core of what you pay for. And it's where Geico and Progressive reveal their true corporate DNA. Let's start with the very first step, filing the claim. Both companies have invested hundreds of millions of dollars to make this initial moment as painless as possible. You pull out your phone, your hands might still be shaking, and you open the app. With Geico, you're met with one of the slickest, most intuitive user interfaces in the entire insurance industry. It's clean, it's fast, and it guides you step by step. Upload photos, document the scene, get a claim number. It's a masterclass in digital efficiency. They know you're stressed, and their app is designed to be a calm, digital hand on your shoulder. For simple, clear-cut accidents, the Geico app is arguably the gold standard. Just works. Progressive's app is also excellent, but it often nudges you down a slightly different path. Their photo estimate tool. The idea is brilliant in its simplicity. Snap a few pictures of the damage, upload them, and their system, powered by AI, will spit back an initial estimate, sometimes in a matter of hours. Feels futuristic. Feels fast. But here's the catch, and it's a big one you'll find buried in customer complaints. That initial AI-generated estimate can be low, sometimes shockingly low. It doesn't see the hidden frame damage or the cracked sensor behind the bumper. It's a starting point for a negotiation you didn't even know you were in. So while Progressive's tech is impressive, it can create an immediate, adversarial feeling. Your first interaction is them offering a number that your body shop mechanic might literally laugh at. So the digital handshake is done. Now comes the human element. You have to talk to a person, an adjuster. And this is where the path between Geico and Progressive diverges dramatically. Geico operates on a model of massive centralized scale. When you call, you're likely speaking to someone in a large call center who might be hundreds if not thousands of miles away. They handle a high volume of claims, and they are trained for efficiency. For many customers, this is perfectly fine. They get a competent professional who processes the claim, follows the procedure, and cuts the check. But this scale is also Geico's greatest weakness. The National Association of Insurance Commissioners, or NAIC, tracks customer complaints. Geico's complaint index often hovers right around the national median, sometimes a little bit higher. This isn't terrible, but it's not exceptional either. It reflects this inconsistency. You might get a seasoned, empathetic pro who makes your life easy. Or you might get a brand new adjuster on their third day, reading from a script, who sees your crumpled car not as a personal crisis, but as claim number 7 for Bravo Tango. When things get complicated, a dispute over who was at fault, or the value of your totaled car, the forums are filled with stories of Geico customers feeling like just another number, lost in a giant, impersonal bureaucracy. Progressive takes a different approach. While they also have large call centers, they've built a nationwide network of claims adjusters and their own branded service centers. This is their concierge level of service you hear about in their ads. If your car is drivable, you can take it to one of their centers, and they handle everything. They assess the damage, they write the estimate, and they even have rental cars from Enterprise waiting on site. They'll then manage the entire repair process with a pre-approved body shop in their network. On the surface, this sounds amazing. It's a one-stop shop designed to remove hassle. And for many people, it works exactly as advertised. It's fast, it's convenient, And it's a key reason why Progressive consistently scores at or near the top in J.D. Power's claim satisfaction studies, often beating Geico. But there's a flip side. This beautiful, streamlined system works best when you play entirely within their rules. The moment you want to use your own trusted, independent mechanic, a shop that isn't in their network, you can feel the friction. The process can slow down. The adjuster might question your mechanic's estimate. You may feel a subtle or not so subtle pressure to use their preferred vendors. They've built an incredibly efficient machine, and they want you to stay on the conveyor belt. Step off and you might find the concierge service suddenly feels a lot less accommodating. This leads us to the final, most important step, the payout. The settlement. The check that's supposed to make you whole again. With Geico, if your claim is straightforward and the costs are clear, the process can be incredibly fast. They don't want to waste time on small to medium claims. They'll assess, agree, and direct deposit the money. It's part of their efficiency model. The problems arise when there's a gray area. Let's talk about a total loss, where the cost to repair your car exceeds its value. Geico will run a market valuation report to determine what your car was worth 1 second before the crash. A common complaint is that this initial offer can feel low. They might use auction prices or comparable vehicles that are base models when you had the premium trim. If you challenge it, you have to provide your own evidence, your own comps, and fight your way up the chain. It can be a grueling, paperwork-heavy battle against a company that has more data and more resources than you do. Progressive, the company obsessed with data, is a master of this game. Because of tools like Snapshot and their decades of analyzing risk, they have an almost frighteningly accurate understanding of vehicle values and repair costs. When they make you an offer, it is not a guess. It is a calculated number based on millions of data points. Like Geico, that first offer, especially on a total loss, might be on the low end of the fair market value range. They expect you to negotiate, but their adjusters are often empowered to make deals. They can be more flexible than Geico's agents, who may be more bound by rigid corporate rules. If you come to the table with a well-researched counteroffer, you have a decent chance of getting them to budge. They want to close the case. They want to move on. They are less of a rigid monolith and more of a data-driven trading floor. So what does this all feel like for the average person? Forget the data for a second. Let's look at the nightmares. Go to any review site and you'll see the patterns. The one-star Geico reviews often sound like this. I was a loyal customer for 15 years. Never had an accident. Then I got rear-ended, a clear-cut case. It's been 6 weeks and I'm still getting the runaround. Every time I call, I get a different person who has no idea what's going on. They made me an insulting offer on my totaled car and are refusing to budge. I feel completely abandoned. The theme is impersonal bureaucracy, feeling like a ghost in the machine. The one-star Progressive reviews have a different flavor. They sound more like this. The Progressive adjuster was nice at first, but pressured me to use their approved shop, which had terrible reviews. I took it to my own guy, and suddenly the adjuster is fighting me on every line item of the estimate. They're trying to force me to use used parts on my 2-year-old car. Their initial photo estimate was less than half of the final repair bill. It feels like they're on the body shop side, not mine. The theme here is control, a feeling of being manipulated through the process for their own convenience and profit. Two different companies, two different philosophies for handling the worst day of your driving life. Geico offers a streamlined, hands-off digital experience that can feel cold and rigid when things go wrong. Progressive offers a hands-on, managed experience that can feel controlling and adversarial if you don't follow their script. One is a vast, efficient assembly line. The other is a tightly managed walled garden. So, after all of this, the pricing, the discounts, the tech, the terror of the claims process, which one is actually better? Which company should you trust with your money, and more importantly, with your peace of mind? The answer is not about picking the lesser of two evils. The final verdict comes down to understanding which of these two corporate philosophies best aligns with who you are as a consumer. And there's one last piece of the puzzle, a final crucial difference between them that solidifies the choice. That final piece is the moment of truth. It's the one time you ever hope you don't have to interact with your insurance company, but it's the entire reason you pay them every single month. We're talking about the claims process, because when the worst happens, when you hear that sickening crunch of metal and glass, the funny commercials and the clever slogans evaporate. All that matters is the promise you bought. And here, Geico and Progressive reveal their most fundamental philosophical difference. Geico's entire brand is built on speed and simplicity. 15 minutes could save you 15% or more. That ethos is baked directly into their claims process. It is, by design, a digital-first streamlined machine. You can file a claim, upload photos of the damage, schedule an inspection, and arrange for a rental car, all from their app, often without ever speaking to a human being. For the vast majority of claims, a simple fender bender in a parking lot, a cracked windshield from a rock on the highway, this system is brilliant. It's fast, efficient, and low friction. It removes the emotional stress of phone calls and waiting on hold. The goal is to get the claim processed and the check cut as quickly as possible. Geico is betting that for most people, most of the time, speed is what they crave after an accident. They want their car fixed and their life back to normal yesterday. But what happens when it's not a simple claim? What if there are multiple cars involved? What if fault is disputed? What if there are injuries? This is where the efficiency of the machine can start to feel like the coldness of a bureaucracy. When you need empathy, you might get an automated email. When you need to explain a complex situation, you might be filling out a standardized form with no room for nuance. The very system designed for speed can become a source of immense frustration when your situation doesn't fit neatly into its predefined boxes. You can feel like a case number, not a customer. It's a trade-off. In exchange for lower premiums and blazing fast service on simple issues, you accept a less personal, more automated process if things get messy. Progressive, on the other hand, approaches claims from the perspective of their data-obsessed analytical core. They were the first to offer drive-in claims centers, and they've built a massive infrastructure around the physical, on-the-ground assessment of accidents. Their process is inherently more hands-on. While they also have a great app and digital tools, their system is designed to be more investigative. They want to collect more data points, understand the full context, and get it right, not just get it done. This can mean the process feels slower. You're more likely to speak with a dedicated claims adjuster, who will ask more questions. They might want to interview witnesses or reconstruct the accident in greater detail. For that same simple fender bender, this can feel like overkill. It can be frustrating to have more hoops to jump through when the situation seems obvious. It can feel like they're looking for a reason not to pay. But for that complex chain reaction pile up on the interstate with conflicting stories and serious potential liability, Progressive's methodical, data-driven approach can be your greatest asset. Their thoroughness is designed to protect you in the most chaotic scenarios. They operate on the principle that a little more time and investigation up front can prevent massive legal and financial headaches down the road. They're not just processing a claim, they're managing risk, both theirs and yours. So now the final verdict. Who is better? The truth is, there is no single champion. The best choice is not Geico or Progressive. The best choice depends entirely on who you are. Geico is the better choice for the self-sufficient optimist. You are tech-savvy and comfortable managing things through an app. You have a clean driving record, a relatively standard car, and you live in an area with predictable traffic. You believe that if you have an accident, it will likely be a minor one. Your priority is getting the absolute lowest premium possible without sacrificing basic coverage. You want your insurance to be invisible, a bill you pay and then forget about, and in the rare case you need it, you want the process to be as fast and painless as a fast food drive-thru. You value efficiency over a personal touch. Progressive is the better choice for the cautious planner. You might have a more complicated driving profile, maybe a past ticket, or a young driver on your policy. Perhaps you own a non-standard vehicle, like an RV, a boat, or a custom motorcycle, that requires more specialized coverage. You understand that accidents can be messy, chaotic, and legally complex. You are willing to potentially pay a slightly higher premium for the peace of mind that comes with a robust, hands-on claims process. You want to know that if the worst happens, a team of experts will be there to manage the chaos. You value thoroughness over speed. So how do you make your final choice? Comes down to a simple 4-step action plan. First, forget everything you think you know and get quotes from both. Right now, open 2 tabs in your browser. Go to geico.com and progressive.com. This is non-negotiable. All the brand identity, corporate philosophy, and customer service data in the world doesn't matter if one is 40% more expensive for you. Your specific age, car, zip code, and driving history will create a unique pricing profile. This is the single biggest factor, and it takes less than 30 minutes to get your number. Second, compare apples to apples. This is critical. Do not just look at the final price. You need to ensure the coverage is identical. Set the same limits for bodily injury liability, property damage, and your uninsured motorist coverage. If you choose a $500 deductible for collision on Geico, You must choose a $500 deductible on Progressive. Match every single line item, from rental reimbursement to roadside assistance. Only then can you accurately compare the prices. Third, now with two equal quotes in hand, it's time to factor in the intangibles we've spent this entire time discussing. Look at the two numbers. Is the difference negligible? $5 or $10 a month? If so, your decision should be based on philosophy. Do you align more with Geico's streamlined, digital-first approach or Progressive's data-driven, hands-on methodology? Think about the worst-case scenario. Who do you trust more to handle that catastrophic event? Which company's personality gives you more confidence? This is the gut check moment. Fourth and finally, hunt for discounts. Before you pull the trigger, go back through both applications and make sure you've checked every single box you qualify for. Are you a member of an honor society? A federal employee? Do you have an anti-theft device? Are you bundling with home or renter's insurance? Sometimes a single, overlooked discount can completely flip which company is cheaper. Don't leave that money on the table. In the end, this battle between two titans of the insurance world isn't about a gecko versus a woman in a white apron. It's a reflection of two different ways of looking at the world. Geico sells simplicity and savings. Progressive sells preparation and precision. One is a tech company that happens to sell insurance. The other is an insurance company that has mastered technology. Your car insurance is more than just a legal requirement. It's a multi-thousand-dollar-a-year contract that promises to have your back on what could be the worst day of your life. The right choice isn't about finding the cheapest policy. It's about finding the one that best fits your life, your priorities, and your tolerance for risk. The best insurance company isn't the one with the most memorable Super Bowl ad. It's the one that you trust to honor their promise when you need them most. Now you have the framework to decide who that is for you.